So again, this is a direct benefit for the railways. It assists the process of modernization, automatically brings in private participation. So one part of it is, of course, FDI. We've also seen that when FDI comes in, when foreign investors come in, there's also some kind of incentive for Indian investors, the private sector, to also come into the same business. So again, an example to draw with telecom, you'll say that when we had all these international players coming in, we saw Reliance starting off, suddenly it was one of the later arrivals in the telecom segment. So they came in saying, so we had a private sector participant who is now one of the major players in the industry. So that could also be happening. Forges strong backward linkages with the rest of the economy, we've gone through this already, and increases employment opportunities through the skilled and unskilled spectrums. So I think this is an important part which I think we should all be conveying to the employees, because very often there's this misnomer saying that I'm going to lose my job because FDI comes in. We haven't really seen this happening in any segment as such where FDI comes in, for the simple reason that as long as my demand is much greater than my supply, and my supply through FDI can never match my demand, there will always be a continuation of a demand for higher number of jobs. So employment will definitely be increasing. Now, what it does not mean, it definitely does not mean the privatization of railways. Railways operations doesn't really come into the picture by this FDI rule. Loss of jobs or replacement of the same, definitely it's not going to happen. And large amounts of indoors. So these are the negatives won't be there, but also let's not be too optimistic of saying that large amount of money is going to flow into the railways. That also is not going to happen. Now, what are the concerns of investors? Again, this is something which I've touched upon. One is, of course, the regulatory environment. So under the current government, there's a lot of hope that the regulatory environment will be made more investor-friendly, because when the Narendra Modi government has made it clear that we are not going to supply the funds, but we're going to provide an enabling environment, the whole idea is that whatever kind of log jams are there, whatever administrative blockages are there, we're going to ease them so that you can come ahead and invest. If there's a problem in clearances, we'll give you the clearances, but the funding is not going to come from me, you're going to get the funding. Ease of doing business, this is what I mentioned about World Bank doing business. We're very low, so investors are still a bit skeptical about putting large amounts in India. State laws and impediments, now we have seen in things like mining that where the central government gives you permission or the state government gives you permission, the central government or the Ministry of Environment comes in. We had this case in Orissa for mining of bauxite, where state government had permitted it, but the Ministry of Environment came in the way, and then the company got into trouble because the project couldn't go ahead on account of state laws going against the central laws. Land acquisition will continue to be a kind of stumbling block for any of these projects. So unless it is land which is actually owned by the railways, it says that, okay, investor can come and invest on this particular land which I own, that becomes smooth. But if it's a case of saying that I have to set up a project, I have to set up my factory, I have to set up my unit in order to produce things which requires acquiring land from the private sector, especially if it's farmland, there's going to be problems out there. Labor laws is something which they are still skeptical about, because generally foreign investors feel that if I come in and set up a unit out here, I cannot hire and fire labor. Now this is of course a contentious issue, because as an employer, I feel that if my business is down, I should be able to downsize. But socially speaking, ethically speaking, this may not be right. And if you realize that the labor law which has really been passed, I think yesterday in the parliament, it's more of a kind of the easier ones which they've taken up, saying that we're not going to harass a small unit in case you don't do certain compliances, in case you don't report certain kind of numbers. It's not a case of saying that you can hire and fire. That is still a very long way away in a country like India, where we don't have a social security process in place. Purchase guarantee, normally when FDI comes in, they always expect the government to give a purchase guarantee. Now that's not something, that's some decision which the government has to take, whether they will say that I will be buying X number of coaches from you, Y number of this equipment from you, provided you produce it at my cost. It's an open thing, something which will have to be considered. Now, an interesting thing which I think Mr. Rajiv Dutt actually asked me to do some kind of research to find out whether FDI actually is in the railways, how far has it penetrated in other countries. So by doing this kind of a little bit of research, we found out that China allows in railway freight. So in terms of railway freight, China gives permission to FDI there. Mexico permits 49%, so it's in railway services. So it's 0% in Indian railway services, but Mexico has gone a step ahead, said up to 49% can be FDI in railway services. High-speed trains between Singapore and Malaysia is based on FDI, this is 100%, but of course Singapore and Malaysia are different kind of countries which rely, since you don't really generate that kind of wealth within the country, you necessarily have to be very much open to foreign investors. Chile allows FDI in railway infrastructure, here also the number is 49%. Russia is open to FDI for building railways. So again, they're going into a case of saying that if I'm looking at infrastructure, let's try and get in. So general picture is that FDI definitely does operate in railway infrastructure in other developing countries. But in terms of services, it's still not a very common thing. So there may be an exception, like we are talking of Mexico, 49%, but even when you say 49%, it means 51% still remains with the government. So it's a very smart way of doing it, where I get the funds, they get the foreign funds, but I don't give you the ownership, it's still run by the government. But on the other hand, one can always say that maybe 10 years or 20 years down the line, the government could take the stance that I move 49% to something about 50%. That cannot be said. And last of all, what has been the reaction, if at all we believe that the stock market is any kind of an indicator about any kind of policy decision taken by the government? Generally, the stock market has given a thumbs-up signal when this was announced, when the FDI in railway infrastructure. We see all these company names which have, whose share prices have gone up. Of course, this is all a one-time, so it's not a continuous thing. When the announcement was made, we see how the stocks have reacted. If they have reacted positively, one way of interpreting it, I'm not sure if it's the right way, but normally the way one interprets stock markets is that these stocks are going up, meaning therefore it's good for this particular industry. Railways have set up a departmental panel to facilitate FDI. I think all are familiar more with this. And last of all, China and Japan have shown interest in the area of high-speed trains. So even though personally I think this is a project which may not really take off, but I think when you see people like China and Japan showing interest, again, one is not quite sure, since our Prime Minister did visit these countries and everybody would probably say the same thing, saying that we are interested in this kind of a project because they have these kind of bullet trains. It's but natural that there will be some kind of conversation on participating in the Indian effort. But on the whole, nothing really negative about FDI in infrastructure, and there will be positive gains for not just the railway infrastructure, but also the backward linkages for overall industry and the economy. I think that's my presentation. If you would like to have any questions or share your own views, that would be excellent. In fact, I would like to hear your views rather than questions, because I think I don't think I'll be equipped well enough to answer you all, because you all are in the business and know better how it functions. But definitely your views on it, I think, will be enlightening for the entire audience.
So you put it that thing, how much has come?
So the numbers, I couldn't get an idea about the numbers which have come. This. Absolutely. But my only sense is it would definitely have been a bit positive. Now, as I told you, I have no access to the numbers, so I wouldn't be knowing it. So I can't give you an honest answer. It's more of a kind of an economist conjecture, is that given the fact that in lots of these countries, the regulatory environment is more favorable for foreign direct investment, it is possible that we have had a fairly good amount coming into that.
No, you had shown that China gets about
$500
billion
yeah.
a year. Out of that, how much has been the railway? Any idea?
No idea. I couldn't access the data. I've tried it. No, let me see if I could. I'll do further research. If I get it, I'll forward it to you. But I did put in quite a bit of effort. I couldn't get hold of this. Even this is more through finding out from various government sites whether it's permitted or not. What are the FDI rules?
Second question is, PPP has been a failure. I would say failure.
Absolutely.
For various reasons. Many reasons there. Long gestation period for the project delays, railways being a difficult organization when you execute a project with operations going on, various reasons. Can those not also be reasons to impede the inflow of FDI funds?
Absolutely, because whatever comes in the way of a PPP project would also be holding for an FDI. See, anything which is non-government, we're talking of private participation, either domestic or international, would face the same kind of problems. And especially in infrastructure, I mean, the gestation period and the rate of return is important. Because even these guys are actually, they of course have the advantage that they're borrowing at a lower cost. Because if they're investing, they have that interest rate advantage of doing it. But then you need to get the returns at some point of time. Yeah, I think they go over the last 1 year, we have seen the rupee going down by around 15%. So if you actually put in that particular factor, the cost will also be high. And in fact, today I think people are talking of the rupee going towards 70, 80, not immediately, but probably in the next 2 or 3 years to remain competitive. So if that's the case, definitely the cost of borrowing would also go, the actual cost of borrowing.
ECB is not always very, although at 1%, 2%, 3%.
See, the RBI puts a limit about what's the band over LIBOR which you can borrow. But then the exchange rate risk is something which you have to take on. And normally nobody hedges it because the cost is high. Because today if I have to do my forward premium is 8%. So I'm not going to hedge my forex risk for this reason. And I can't do it for 15 years. So definitely, that's what I'm saying, we should not be gung-ho about it, saying that, look, we open the doors, now everybody's going to start coming in, there's going to be a long line. It's not really going to happen. No, I don't have access to the numbers, sorry ma'am. I wouldn't be able to give you an honest answer there, but because we don't have access to each of these countries, I'll definitely try and I'll send that information. So I think it's a very pertinent question about, okay, to say we have, like even India has lovely law saying 100% can come into certain segments, but how many people are actually investing? The problem is really common. No?
One question is, government has said that DA will not come in the operation of the trains.
Right.
So, therefore, they can only provide the infrastructure.
Right.
They can't run the trains. The running of the trains, the pricing the services, it has its own limitation because it has to be more than Rajdhani Shatabrdi, but bullet trains cannot cost more than air, fare. So that being the situation, suppose the returns they expect from the investment is not going to be met from the passenger fare of this bullet train. What is the way out? Will the government chip in? Like in investment of an infrastructure project, there is something called viability gap funding. Government come in and then do the balancing. In FDI, is there any internationally?
No, normally there is no viability gap funding for FDI. FDI brings in their own funds. They need to get into an arrangement with the railways about what kind of returns they're going to be paid. Now, in case the traffic doesn't happen for some reason, or your estimates are wrong,
but the pricing of the the product would be an impediment because then you will not be able to.
No, but I think when you get into this agreement, we'll always have these fancy ideas that so many people are going to travel. This is going to be the cost which we're going to do, and there'll also be a case of saying that my cost of operations is going to be X, my price is going to be Y. Based on that, I think that in the next 10, 15 years, I'm going to make my returns.
Therefore, they have to be involved in that. Just
They
the
will be involved.
purchase guarantee alone will not help.
Purchase guarantee. No, any kind of this you'll have to have a purchase guarantee at a particular price. Only then will I put in my money. They will do their due diligence. And in fact, in all these cases, there's a lot of discussion which goes on because there will be a tendency for one to overstate. Like, as far as the railways are concerned, if I'm going to pay the investor, I'll say I expect maybe 10,000 passengers a day, even though 10,000 may not be feasible. So there will be a due diligence done also by the investor before he puts in his money.
See, so far, the investment in the infrastructure has not been encouraging at all. I give you an example of gas, I give you an example of petroleum, I give you an example of coal. In all these sectors, you see they have burnt their figures. And particularly in the railways, again I am very doubtful because you have no regulatory system at all, no regulatory regulation at all. In areas where the regulatory system is there, even there, you see the investors have burnt their fingers. So I don't know how you are estimating that this is a very attractive proposition for our investors because as you know, it's a completely good. And railways is not an area where I think they are expecting very high returns. So I don't know how you are arriving at this kind of figures. It has a lot of money to flow in the railways.
No, actually, let me clarify. A, I am not saying money is going to come in. The 90,000 crores is something which has been put up by the government, saying that for all these particular schemes, which we are talking of FDI coming in, will require 90,000 crores. I'm personally skeptical. I've always maintained that we're not going to get this kind of money.
Apart from the problems you enlisted for private or FDI investment, railways have the peculiar problems. And it is because